Hello, I'm Phil Baker, President and CEO of Hecla Mining Company, America's largest silver producer. Thanks for joining us for this second quarter 2022 earnings review. Hecla's second quarter was a good quarter, but let me start with how this quarter positions Hecla to be the fastest growing silver company with the advancement at the Lucky Friday, the expected Alexco acquisition, and small throughput increases at Greens Creek. Now in the next few years, with this growth, Hecla could be producing on a sustainable basis 17 to 20 million ounces of silver. Compared to last year's production, this is a 30% increase on the low end and a 50% increase on the high end. Lucky Friday is growing to 5 million ounces of silver next year because of increasing grade and almost 6 million ounces in 2024 because of a new mining method called the underhand closed bench, or UCB. I was underground twice at Lucky Friday this past quarter, and I'm struck by the opportunity the UCB has on creating a safer and more productive environment. I think there is the opportunity for even more silver production as this method gets optimized. The second driver of growth is the acquisition of Alexco with their Keno Hill mine. This is probably the highest grade multi-million ounce silver reserve in the world. We expect to close the acquisition by the end of the third quarter, and by the end of 2023, we'll be set up to mine for a number of years. In addition to being America's largest silver producer, we could be Canada's largest silver producer as well. The third driver of silver growth is increasing Greens Creek's throughput. Not monumental increases, but incremental improvement of 5 to 10% over the next couple of years. With these increases, I think Hecla will provide growth as one of the fastest growing silver miners, scale as the second or third largest silver miner, returns with our low cost and long mine lives, and stability with the growing production all coming from the United States and Canada. Now talking about the quarter, we saw revenues over $191 million, 34% from silver, 40% from gold, and zinc and lead at 26%. Greens Creek had about half the revenue, while Casa Berardi was over 30% and Lucky Friday just under 20%. We generated $40 million of cash flow from operation and free cash flow of almost $6 million. We ended the quarter with $198 million in cash and available liquidity of $335 million and a net leverage ratio of 1.4 times, which is well below our target of 2 times. The margins Hecla generated are probably the best in the industry. This past quarter, we generated $12 of margin on every silver ounce we sold, which was about $20 per ounce. These margins have translated into free cash flow, 9 quarters in a row for a total of $238 million. Over the second half of the year, we expect to invest more in the mines to generate production growth, so free cash flow will decline. Greens Creek produced 2.4 million ounces of silver, consistent with the first quarter's production and driven by higher grades and coupled with strong byproduct prices, resulted in negative $3.29 cash cost per silver ounce and an all-in sustaining cost of $3.48 per ounce. So the margin was about $17 per ounce, and now the mine has generated $266 million of free cash flow in the past 6 quarters. With a strong first half of the year behind us, annual production guidance is on track and costs will be better than expected. Greens Creek is among the best silver mines in the world and in one of the best jurisdictions. The Lucky Friday mine had a strong production quarter and set a throughput record as a result of the UCB method I mentioned earlier. Quarter over quarter, silver production increased by 38% to 1.2 million ounces, while AISC decreased to $9.91 per silver ounce, a reduction of 25% over the first quarter. Lucky Friday had its 6th consecutive quarter of positive free cash flow from the mine, with $45 million generated cumulatively. Annual production is on track, very attractive costs. The Casa Berardi mine produced just over 33,000 ounces of gold at an all-in sustaining cost of about $1,600 per ounce. Gold production was 10% higher than in the first quarter as consistent mill performance, coupled with higher throughput, recovery, and grades led to higher production. AISC declined 9% over the first quarter, primarily due to higher production. Annual production is also on track with guidance, but margins are squeezed as inflationary pressure is felt on costs. Now, the second quarter was solid, and we published our sustainability report highlighting that in addition to producing the silver for solar energy and other green energy uses, that we are net zero for scope 1 and 2 of greenhouse gas emissions. Finally, I want to mention that Ted Crumley, our long-standing chairman, has retired, and the board has elected Cassie Boggs. She's been on the board for about 6 years and is now our chair of the board. Thanks for watching.